Hello, hello, hello. Good morning, good evening, good night, depending where you are in the world. How's it going, everybody? Can you guys hear me? Could I get an audio and visual check from the YouTube chat? We're doing this Monday market update a bit earlier just because I'm going to be busy in the evening with some family stuff. So I still wanted to make sure that I could do this live webinar for the YouTube audience as well as for private channel members who use this market analysis as well. So we might not have as many people in the chat right now because we're doing this early, right at market end, but hey, who cares? Okay, perfect. Okay, so welcome to a Capital Hungry Monday market analysis stream. We're going to be doing some higher time frame analysis just as we're coming towards the end of the month and end of the quarter, and then down to some intraday analysis across gold, GJ, GBP USD, GBP USD, EURUSD, USDCAD, as well as US30, understanding what fundamentals are at play, as well as what we can expect when we go down to the smaller time frames of some intraday trades and scalp trades. Okay, now before we start breaking down gold here on the higher time frame, and I'm going to show you guys some historical repetition that's going to be taking place and the fundamentals behind that historical repetition, I just want to go over some key fundamental points so you guys understand what's going on in the markets and why. So on your screen you should see a TV popping up here. These are the recent fundamental points. Last week with FOMC, the Federal Reserve during Jerome Powell's conference gave us more confirms that they have the potential to start the tapering process in November, as well as when they do start the tapering process, it can only take about maybe 4 to 6 months from the start to the finish of the process, as it's going to be much more accelerated than what we saw with the 2008 crisis in recovery. So with that being said, we can see when the Feds announced that they might start giving the schedule towards tapering starting in November this year, if economic data is still strong, as well as the tapering process itself would only be maybe 6 months long, which is really only maybe a quarter to half the size of length of time compared to the stimulus process where they were pumping and inflating the markets up for the last year and a half. And it's a lot more accelerated than what we saw with the 2008 crisis. This led to a short-term drop in gold as gold's demand drops with those tapering talks, because obviously fundamental bearish factors for gold are any decisions made by the Federal Reserve that would combat inflation and start dropping inflation, and also decreasing the demand of gold as a precious metal safe haven and bringing more demand back to the US dollar, which through the stimulus process over the last year and a half has been devalued. And I'm going to show you guys that when we look at the dollar chart. But when we see the tapering process by the Federal Reserve, remember, how could I explain this? When the stimulus process happened, think about the Federal Reserve literally increasing the US money supply and primarily just injecting it to the markets through quantitative easing and their asset purchase program. They were buying treasury bills, stock market ETFs, various assets and commodities such as gold and oil by the shit ton with that heavy increase in US money supply. And it was a very aggressive process because that process benefits the rich, who of course buy gold from the lows and have been riding that wave from 1300s all the way to 2000s, oil after the crash from $5 a barrel back to 70, stock market after the crash on Dow Jones, for example, from 18,000 all the way up to 35,000. The stimulus process benefited them. The tapering process is going to be like slowly turning off a water faucet. It's not going to be something immediate and aggressive like the stimulus process. It's going to be very slow. And in my opinion, the stock market will be the last asset class, I guess you can say, or financial market sector that's going to be impacted by the asset purchase program. I can see when the tapering discussions further come and they start tapering, that gold will take a heavy fall, dollar will heavily increase in value, pairs against the dollar will drop aggressively, Oil will also take a bit of a correction, but I feel the stock market will be the last impacted because the 1%, the market makers, the ultra rich, the whales, whatever you like to name them, they're going to keep trying to extend and squeeze out as many gains on the global equities into the new year as possible before the tapering process really impacts the stock market. Okay? Anyways, when we start to get down to the nitty gritty of intraday and scalp trade ideas, understand that this week specifically, we are in the last business week of the quarter, coming to the end of Q3, start of Q4, end of the month period, and there's a lot of central bank speakers and economic data this week, okay? So that is something you have to focus on. Okay, if you guys don't mind, this is going to be a bit of an educational webinar to show you guys some historical technical repetition that we read with the charts, as well as the fundamentals behind it and how very similar the technical repetition is overall. So we are going to start from here on gold, weekly chart, 2008 crash period to roughly 2014, and we're going to go from 2020 here on gold to roughly 2023, 2024. I want you guys to follow this dissection with me so you can understand the historical repetition of what happened during a crisis and the fundamentals behind the scene. So 2008, right? You have the financial crisis caused by the mortgage-backed securities in the US collapsing. Over this period of financial uncertainty and through the asset purchase program of the Feds, you start to see a heavy increase in the value of gold and a decrease in the value of the dollar, peaking all the way to new all-time highs during that period around the 1900s, right? Here you can see from the 2019 to 2020 period when Donald Trump came into play and brought some volatility with trade wars and interest rates already getting cut through his pressure, then having the Iran war potential tensions, and then the pandemic, we had a massive upside play peaking to new all-time highs at 2100, very similar to what we saw to the left here, right? Then after the initial fear and chaos gets priced in, you can see you stay in a longer and a higher time frame range with this buyer demand zone that's respected for a period of years here, but here we've had it respected for an entire year process here. So very similar demand zone that we saw get created, but in here it's around 1700s during the 2020 period. As you start to see on the higher time frame, you also get this bearish supply zone created, which you can see across the zone here, almost exactly the same. And then you start to create some higher time frame bearish market structure. And once the Federal Reserve starts to announce tapering years later after the economic recovery, then you can see we have a break of this demand zone. And as the Fed starts to do the tapering process, as well as increase interest rates years later, gold starts to correct itself because you have the inverse of the fundamentals that made us so bullish, right? So let's dissect this again and label it out as well. And it's the exact same technical as well as fundamental repetition. You go up into this range, you bounce around this demand zone multiple times and fail to break, and then you finally start to break the lows. You go up into this range, you bounce around this demand zone multiple times, fail to break, then you have the fundamental catalyst when you finally clear that demand zone, where in this area it was around 1600s, here it's 1700 during the 2020 pandemic period. But we have to understand the fundamentals that are causing this upside and downside move. So 2008 crisis, right? Interest rates low. Fed asset purchase program. Peak all-time highs. Here you had trade wars. Interest rates low, same thing. Potential Iran war. COVID was the main COVID pandemic. Fed asset purchase program. peak all-time highs. Then you have gold enter this higher time frame range after the fear and uncertainty is digested and priced in. Right? Here you have gold enter a range after the fear a month later priced in, and those all-time highs peaked. Then you have this downside move that breaks the demand zone here when Fed begins tapering and does the opposite of stimulus that you saw bring us to the upside here. Interest rates were low. You had the asset purchase program. Dollar bearish during this time. Dollar bullish during this time. So this pathway on price is going to come when we break below 1700, when the Feds further confirm tapering. You can already see when they confirm that they can potentially start tapering in the next month, right? That last FOMC, we already had this downside move almost starting to bring us down to the demand zone lows. Okay? Does this make sense for everybody so far? In the higher time frame, fundamental and technical repetition. The fundamental repetition being the crisis and then what the Feds did to have this explosion in gold price. Here it was the 2008 crisis. Here it was trade wars, Iran potential war, and then COVID pandemic. But the Feds took the same actions of having interest rates cut and low, as well as the asset purchase program and an increase in the US money supply, right? You can see the same technical repetition of all-time highs peaked, then you never go to revisit those all-time highs, and you create this supply zone and stuck between this demand zone for an extended period of time as well. Then as you start to make your way down to the low of this zone, the fundamental catalyst to break it is the Federal Reserve tapering the stimulus support, dollar going bullish on the higher time frame from its lows, and the opposite of what we had causing the mass stimulus here. So once the Fed further announces the process of tapering and says, okay, we're starting the tapering process, we might see one more upside liquidity grab on gold, but the high probability is dollar's going to go bullish. That's the cause and effect. And then you're going to break below this 1700 point here. Because you have to understand, one of the reasons that gold has been so bullish and the dollar bearish is because what the Federal Reserve did is physically increase the money supply. Look at the US money supply chart here and look at the average money supply we saw over the last 10 years, then this exponential increase. This exponential increase in money supply while interest rates are also low and gold is a part of the Fed's asset purchase program makes gold very favorable for investors to buy into because one, you have low interest rates, which is a bullish factor for gold. Two, it's being supported by the Federal Reserve's asset purchase program. And three, investors hedge inflation risks by pooling money into commodities. So you can see as the money supply is going to be heavily increased, inflation is going to go up too. So the same time, so you have to understand the reason the US money supply increased is so the Fed can have its asset purchase program. They can perform the quantitative easing. They can buy all those treasury bills and stock market ETFs. When they start to use their monetary policy tools and do the reverse of that, what you're essentially going to have happen is the money supply in the US economy start to slowly decrease and level off, inflation start to drop, and then the US dollar go back bullish. Because everything in economics at the end of the day is supply and demand. When you have a high supply of something and low demand, the value of that currency, product, service exponentially drops. So when the US money supply was high and the demand in the dollar was low, you can see that obviously I've shown you guys this so many times. Gold pretty much in the stock market pretty much followed the inverse of dollar movement. So dollar as soon as the money supply increased, went from a value of 102 all the way to a value of 90. This is through the stimulus process that the Feds did. So what do you think will happen when the Feds start tapering to the dollar price? When Feds start tapering stimulus, when they start decreasing their asset purchase program, when they start to take the training wheels off of the economy, what do you guys think is going to be the effect on the US dollar world reserve currency value? Pop quiz. Come on, chat. No way chat doesn't have an answer for this. Man said down. You fucking retard. You guys said dollars going down. Oh my god. Okay, let's do this. The YouTube audience is a different fucking breed. Let's do this again. If the US dollar over the last year, right? As the Federal Reserve increased the US money supply and stimulated the economy, right? And the money supply was increased, and you had the asset purchase program going, and you had quantitative easing active, this led to a devaluation of the dollar. Because we went from a value of 102 to 90, right? If the Federal Reserve starts the tapering process, reverses quantitative easing, and decreases the asset purchase program, what is going to happen to the dollar? What is going to happen to the dollar value? It's going to go fucking up. Right? You're going to see the inverse here. This is going to be the reason when dollar starts going bullish and they start tapering, then gold will also start to go bearish and have the inverse movement. Yes, yes. They're not... Iron Man says there are still other factors like printing money. The tapering process stops the printing of money, Clay. I don't want to be rude to you. I know you've been in the markets for many years. That's what the tapering process stops. When the Federal Reserve starts to do the tapering of the stimulus, the whole point is to decrease the money supply in the markets. That's why you have this. Look at this fundamental and technical repetition on gold. Gold was only bullish for this extended period of time during the 2008 crisis or during the pandemic crisis because interest rates were low, dollar was bearish, and dollar was oversupplied and inflation was high, right? And then you can see here, gold enters this heavy bearish trend years later after the economic recovery. When the Fed begins tapering, dollar goes bullish, right? So when the federal, that money has already been printed out. I don't think, I don't mean to be rude, but I don't think you know what you're talking about here. Because that money has already been printed out. This is the US money supply chart here, right? The US money supply, look at the last 20 years. The US money supply has already been, this is from 2001 to 2017. And then look at the money supply increase just in 2020 and 2021. Right? That's not how... This is... Once the Feds further announce tapering, just listen to me. This is what's going to happen to gold. Whether you like it or not. I'm just trying to give you guys information ahead of time and showing you guys the reasoning behind it. Look at this. Look at this fucking... Okay, let me relax. It's the YouTube audience. You gotta... Okay, Jeev, this is grade 1. You're a grade 1 teacher. Alright, get back in the zone. Okay. Alright, everybody. Alright, class. Look at what happened here in 2008. The timeline of events, the price movement, the technical repetition, and the fundamental repetition. Look at what happened. Look at what happened here in 2019, 2020, and 2021, right? We peaked all-time highs after a very strong bullish run. We enter a large higher time frame zone in range. Then we only break below that demand zone when the Feds begin their tapering process. When the Feds begin their tapering process, gold will break 1700 and start slowly making its way down to the 1500s and 1400s. When this tapering process happens, the dollar will also go bullish. The market history is always relevant. The funny thing is, Iron Man, you've been trading 17 years. Weren't you around during the 2008 financial crash? You should be teaching us this, my friend. You should be teaching us this. I'm just playing around with the boys, just joking, banter. So you should understand what the Federal Reserve does in their actions and the impact to the market, right? The stock market, oil, and gold have only been bullish due to the asset purchase program of the Federal Reserve, and the Federal Reserve taking all of these. So this is the step-by-step process. Let me tell you guys exactly what happened. The Federal Reserve is the central bank that literally dictates the money supply and value of the US dollar to the US economy. Not freaking Goldman Sachs, not the US government, not the president. No, the Federal Reserve is a privatized bank that operates outside of the US government and is not run or controlled by the US citizens or people. They dictate and control the US dollar, okay? When we had this crisis, which in my opinion, every crisis is essentially man-made because it creates an opportunity for the rich, and it also follows the historical repetition of what we see with 2008, what happened in 2000, 1980s, the Great Depression, and so forth, is that during a period of crisis, you have a massive drop in economic data. So for example, in 2020, the economies had a crash because of the pandemic, and it obviously led to global lockdowns. The Federal Reserve flips on a switch and increases the US money supply at will. The Federal Reserve increased the money supply exponentially during the 2020 period, and what they did is they take this money supply and they literally inject the financial markets. Okay? So how do they inject the financial markets? How do they help the government? How do they give money to the government, corporation, stock market? Well, through purchasing of treasury bills, T-bills, through purchasing of government bonds, through purchasing of corporate bonds, purchasing of stock market ETFs, purchasing of commodities and assets such as real estate, gold, oil, are all a part of the Federal Reserve's asset purchase program. Okay? When the Federal Reserve takes this excess increase of money supply and they inject it into the economies, you're going to notice that from 2020 crash, gold was bullish, stock market was bullish, oil was bullish, US housing market was bullish, real estate overall bullish. Why is it bullish? Because of the Federal Reserve literally injecting this money supply into it, right? But you have to understand, increasing the money supply this way, everything has a cost, everything has a sacrifice. The sacrifice of increasing the money supply and injecting the financial markets is that inflation heavily increases, as well as the US dollar gets devalued. So when you have economic inflation increase, this leads to a higher cost of goods for general goods in the economy, and also a devaluation of the dollar. Why is gold in the asset purchase program? What are assets, dummy? Your name's FOREX education. Oh, I can't take too much of this. Gold is an asset. Gold is a global asset. That's why. Just like commodities like oil, stocks, these are assets. These are part of the asset class for the Federal Reserve. All right? Okay. Are you guys following along? So when the Federal Reserve increased the money supply and they injected the money markets in the financial markets, who benefits from this? Is it the middle class, the poor, or is it the rich? Who benefits from this? Who do you think is buying oil from its lows, gold from the lows, stock market from the lows and scaling in? Who do you think it is? The person who lost their job in business? The rich, the ultra rich, right? So through this process of crisis and opportunity, the ultra rich benefit through this process. The institutions, the market makers, the whales, the ultra rich, the 1%, whatever you like to name them, right? But the sacrifice of this US money supply increase is that you have a massive increase in economic inflation, an increase in the cost of goods, as well as a decrease in the buying power of the dollar. Because remember, as the money supply increases and the demand for the dollar drops, dollar went from 102 to 90. This means that every single American citizen's dollar in their pocket lost value over a year. Okay? Who pays the sacrifice and pays the price? The sacrifice is higher inflation. The sacrifice is higher cost of goods. The sacrifice is less buying power in the dollar. Who pays that price? Who pays that sacrifice? So the rich can benefit. Who really pays that price? Are the rich impacted by the cost of goods increasing or the inflation? Are the rich impacted by less buying power in the dollar? No, we pay the price. The working class, the middle class, the poor, they pay the price. As a collective, they are the ones who pay the price. And the fucked up part is they don't even know they pay the price. You understand? So, when the Federal Reserve starts to finally say, all right, we made enough money, the 1%, the ultra rich, the market makers say, all right, we made enough money. We are rich enough now. We are going to start tapering the stimulus support, because you can't let inflation get too high, because once you start to enter a hyperinflation stage, then that's a whole nother risk to the market itself. So they know when inflation is at a dangerous level, and they also have all of the tools to decrease inflation and decrease the US money supply again. How are the Feds going to decrease the US money supply and decrease inflation? What are they going to do? They're going to taper off the stimulus. They're going to decrease the asset purchase program, decrease quantitative easing, start to look at interest rate hikes. Right? Jonathan, can you stop spamming the chat, you fucking mental retard? God damn. No, nothing. Inflation's at maybe 6-7% yearly now in the US, you goofy. Holy. Right? So when the Federal Reserve starts to taper the stimulus support and do the reverse of what they did to keep gold and oil so bullish, what do you think is going to happen to gold here? No, yearly inflation is still pretty high, I think, 4 to 6%. You have to understand, normal inflation is 2%, right? And the economy is already well recovered. Like, economic data is well recovered. More people in the US are getting vaccinated. There's no more lockdowns. More people are going back to work. The economy is at a stage where they can start to begin tapering in the next couple of months. When they start beginning tapering and gold starts to break below 1700s, you are going to know why with the technical and fundamental repetition. It doesn't matter about the government stimulus bill. It doesn't matter about the government spending. It doesn't matter if there's more freaking COVID variants. As long as the US does not go into lockdown, as long as the Fed start tapering, this is the process that gold is going to follow. And look at this. Look at oil 2020 after the crash. Oil is a part of the asset purchase program. Look at the stock market. Extremely bullish with that support. tapering is supposedly supposed to start November. Okay, so now, anyways, so that was, you guys can always rewatch this. Let's focus more here, okay? So now, we can see that gold on the higher time frames is very bearish here, right? We have this bearish market structure being respected. We're starting to break below this price zone and demand zone around the 1770s, and we have very strong bearish price action with potential for further tapering rumors to be priced in and making our way down on the higher time frame to 1680s in my opinion. Okay? When we're also looking at the daily time frame, you can see once we clear below around 1740 as a target point for sells, if US dollar continues bullish, gold breaks below 1740, very nice sells down to 1720s. But just because I see that we can start making our way down to 1680s doesn't mean I think it's going to happen this week. We could still be bullish for the time of this week, just because this week we have a lot of central bank speakers and mainly we're coming towards the end of a quarter. Don't forget, the quarterly period here is ending in 2 days. So it wouldn't be out of the ordinary for the new quarter to have a bit of an upside move in liquidity grab and then start making our way to the downside. And that liquidity grab on the new quarterly period can be hundreds of pips, right? So this quarterly candle, as well as from an economic standpoint, Q3 is ending in a couple more days. As we have the new monthly order flow and new quarter order flow set up, it's not going to be out of the ordinary to see gold maybe go up to the 1780s again and then start to really make our way down into the next month, going into fresh into October and further into November, as if tapering gets further confirmed by the Feds. We had some Federal Reserve speakers today that did discuss tapering to come. All right, but anyways, right now in the intraday time frames, you can see that gold is respecting this bearish market structure, but at a very key support area, holding above 1747's area, creating this technical double bottom. I can still see the potential that if we don't break this area, for example, if we come down here and reject 1747 and come back above, I still see short-term buys on gold to potentially collect better seller order flow from 1764s and then making our way to the downside, going to 1720s. So for intraday style trades on gold, if we do not break 1747 and we come back above 1751 previous lows, I'll personally be looking for some gold buys in the short term from 1751s to roughly 1760s. And then from this area, if we do have this happen, I'm going to be looking for sells from 1760s and then scaling in sells accordingly there. I only see safer sells at this point if we have a clean break and retest below 1747 and show a lot more sellers pressure, or a clean break below 1739. All right, just because we're coming towards the end of the month, end of the quarter, we have a shit ton of central bank speakers this week. For example, just besides the economic data, we have overnight, we have European central bank speakers 7:45, US core durable goods, and then 2 p.m. Eastern, Bank of England, 9:30 p.m. Eastern, Australia retail sales. But besides that, sorry, it's the consumer confidence report tomorrow. But anyways, besides that, you could see a lot of US GDP data, jobless claims, and on Wednesday we have 3 central bank speakers all at the same time. Right? So I'm not expecting a meltdown just because we're coming towards the end of the quarter, end of the month. I could see some liquidity grabs and price grabs before we continue down. But these are the trade ideas on gold, okay? If we don't break below 1747, come back above 1751, looking for buys up to 1764, higher risk, higher reward sells at this area. I'm only taking continuation sells with a break and retest below 1747 or a clean break below 1740 and 1739s. Does that make sense? If the US confidence report is also strong tomorrow morning during New York, that's going to bring some more dollar strength, and stronger US economic data also decreases the demand of gold in the short term because it's a precious metal safe haven. So if we have stronger economic data tomorrow, we have the US dollar bullish, and we have this pathway of price, very easy sells from 47 and 39 down to the 1720s targets. Or if we don't break these lows, we're still going to be bouncing around in this area, potentially creating a pullback phase like we've seen many times before. And that pullback phase can extend up to 1760s. I take the buys from above 51 to 60s and look for sells in this area still as well, just like we saw here, just like we saw here. Okay? Does that make sense for the gold analysis and intraday trade ideas? Just keeping in mind some of the economic data tomorrow with the US Consumer Confidence Report. We also have Jerome Powell talking tomorrow, and understanding we are coming towards the end of a quarter, so we can have some rebalance of quarter flow moves and playing the price action and market structure accordingly. Green boxes buy areas, red boxes sell areas. That's just my opinion and 2 cents on gold. Based on the fundamentals, technicals, tapering getting further priced in, especially if US dollar on the dollar index continues bullish on the intraday time frames, it can help with our correlation for the gold sells. Okay? All right? And dollar is still pretty bullish. This is the weekly time frame on the dollar. Once we break above 93.4, it's a pretty clean path to 94, which is going to lead to a drop in every pair against the dollar and a short-term drop in oil as well as gold too. Okay? So we're still looking to take advantage of dollar strength in the short term. You can see the market structure here on dollar as it's been bullish ever since the tapering talks. And that's going to be a common theme when we look at GU, EURUSD, and USDCAD. GJ is a different story. I'm still bullish on GJ, and we're about to do GJ analysis right now. So what I was going to talk about is you can see the Japanese yen by itself, when you're looking at the yen currency index, is still very bearish standalone, and UK equities are still bullish, just sitting at the all-time highs areas, right? You can see UK stock market here. If you were to zoom out on the UK stock market, you can see that it's still relatively bullish. Most stock markets are still bullish across the board. So specifically UK stock markets being bullish shows me a lot more investor confidence within the UK economic rebound. And at the same time, Japanese yen is bearish, and GJ is also respecting this higher time frame demand zone we were calling buys from. Who's been following the other market update webinars and New York trading sessions where we were calling buys from this 149 demand zone, which we have not broken since February, March 2021. Very strong bullish price action as well. Once we clear above this area, we have a nice run up to the 153.5, 154 price points. I'm anticipating a bit of a pullback and then just continuations to the upside in this fashion. As we can see, UK stock markets are still bullish. UK economic data has been stronger. There's no negativity or tensions regarding Brexit. That's sort of been phased out of the headlines. Focus has just been globally on vaccinations. And Japanese yen by itself is bearish, with very strong respect to this higher time frame demand zone. Very strong bullish price action on the daily time frames. And the intraday time frames also very bullish when you're looking at the market structure here. Right? You can see we broke out of this bearish structure, had a technical double bottom at that demand zone lows, which shows us more sellers exiting out of the market, buy orders being fulfilled from that demand zone. Very strong bullish price action with a consolidation zone and a breakout. We know the market only moves up in 2 fashions when you're observing market structure. You either have No, Bank of Japan's not going to have the same impact on the Japanese yen compared to the US dollar impact with the Federal Reserve. So you can see the market only moves up in two fashions. Upside moves, highs printed, buyers take profit, sellers jump in, pushes you down to a demand zone, and continuations up, or you have consolidation zones and breakouts to the upside. This is the easiest way to look at bullish or bearish price action. You don't need to see any like candle patterns or really anything of that nature. Even when you really zoom out here and you look at the way GJ was trending from the crash lows, you have upside plays, pullbacks, continuations, upside plays, consolidation zones, breakouts, and that's all you saw for the last year and a half. Is that transaction between buyers and sellers, pullback and corrective phases that don't break overall structure, and continuations to the upside. And this can be further dissected on the intraday time frames as well. So GJ, I'm bullish. We also had, if you guys remember, the Bank of England sentiment last week, which brought some more strength for the British pound as the Bank of England potentially announced their schedule for rate hikes. But this is what I see on GJ. If we break below 152, I see higher risk, higher reward buys at 151.8, scaling up accordingly. Breakout buys above 152.2. Even if we came to 151.5, still in a bullish bias on GJ, with the green boxes being buy areas and making sure that Japanese yen by itself still stays bearish and the UK equity markets stay relatively hot. I would only be looking for sells personally on GJ if we came below this demand zone, which is the last price sensitivity area where we had buyer order flow enter the market during this consolidation period and then break out into new intraday highs. So we're either going to have a consolidation phase again and breakout and take advantage of the breakout, or as we're showing some exhaustion here, a bit of a pullback phase, get buyers in from better demanded price points and collect that buyer order flow, then continuous back up. Okay? Keep in mind, the main UK economic data is towards end of the week, Thursday and Friday, with GDP figures, quarterly and yearly, and then the manufacturing PMI and so forth on Friday. But economic data across the world is rebounding. Even though they're just talking about all this fear regarding vaccines, economic data itself is well back to pre-pandemic levels and at organic levels, with people going back to work in various countries, not really seeing any further lockdowns, getting more people vaccinated, which shows us that we're getting closer and closer to central banks starting to look at interest rate hikes, as well as tapering stimulus support that was given the last year and a half. Okay. Now, GBP USD is at a very interesting area, but is going to be dependent on dollar movement, because if you notice US dollar as the world's reserve currency, it doesn't matter what pair it's in, dollar dominates because it's the global business currency. Majority of bank-to-bank transactions are still done in US dollar. Oil still traded in the US dollar globally. It's known as the petrodollar, and it just holds that position as the world's reserve currency. And through the Federal Reserve Asset Purchase Program, the correlations have been very strong. So what we're going to look at here is you can see the US dollar is reacting to this previous high. I only expect GU from this demand zone and EURUSD from this demand zone to bounce if dollar can fail to break these highs and go bearish below 93. But I personally do not see that happening in the short term. I see the potential that dollar can give a bit of a pullback and start making its way up to these highs and potentially breaking higher, especially if US economic data continues to rebound this week, which I am personally expecting it to do. Okay? If US dollar continues bullish and breaks above this high at 93.6, EURUSD is going to melt this demand zone. GU is also going to come back to these lows and melt this demand zone. And UCAD is going to bounce off these lows and start to turn bullish as well. But when we're looking at the intraday time frames right now, we're just in a bit of a messy range here, right? So you can see we're just in a bit of a messy range between these highs and lows based on the US dollar indecision. The easiest trades to call out on GBP USD is if we break below 1.365, as well as 1.36 lows, and dollar continues bullish, sells from these areas as long as dollar index is bullish, breaking above highs. I'm only taking buys on GBP USD if we safely come above 1.374 or 1.378. I am more on the bearish side on any pair against the dollar just because of the pricing in we've seen with tapering, and I do see economic data still being stronger, to be honest. So that's going to bring some more potential dollar strength. Dollar doesn't matter what pair it's in, dollar dominates, and you can see that very clearly. So even though we had individual strength on GBP, and you can see that GJ had this such a nice beautiful upside move from these lows to these highs, almost extending like 300 pips, GU has been stuck at the low of this range, going up and down about 50 pips because the dollar is what's dominating that pair. And you're going to see that regardless what dollar's against, right? So if dollar continues bullish, it doesn't matter if GBP is still holding strength individually. It's not going to be able to overpower the dollar strength in terms of investor transactions and impact. You're still going to see GJ might be going up, but if dollar's bullish, even though GJ might be going up, GU's still going to be dropping or coming back down to those low points. All right? And you can see, compared to the safe haven currencies, yen is still bearish based on Bank of Japan impact on the higher time frames. Dollar's a lot more bullish. Right? So, if dollar continues bullish, sells below 365, sells below 36. But other than that, this range is getting a bit messier here, and that's due to the indecision of the dollar coming towards the end of the quarter period as well. So it makes sense, you know what I mean? Euro USD, you're going to see something very similar, but Euro has not had as much strength compared to GBP because ECB has had a more of a softer sentiment compared to the Bank of England. So on Euro, I'm in more of a seller's bias with either pullback sells at 172, break below sells 1685. With dollar strength and euro still being relatively softer than GBP and other risk currencies. I would only take Euro USD buys above 1.176. I need to break out of this bearish structure, validate we don't break these lows first and show seller exhaustion, then break above the bearish structure and clear all this noise. Then you would see a nice upside move on euro. That's only going to come if dollar's bearish. Dollar is still bullish. We do have the potential of showing a lot more seller's pressure at these lows as well. USDCAD, more in an intraday bullish bias. I'm actually starting to look for buys if dollar continues bullish above 1.264 and back above 127. So looking for something like this and then this. As long as dollar continues bullish, oil starts to soften a bit from its highs and decline similar to other commodities and assets such as gold, I would only be looking for UCAD sells safely below the 1.258 price point. Otherwise, my main, even though we like to adapt to the other bias if we have those confirms take place, obviously we can't always be right. Our job as manual retail traders is not to try to be right all the time. It's try to do effective analysis, follow, plan with that analysis, execute, and then let the risk management and probabilities do its work. Sometimes you're not always going to have your main bias you expected take place. So you should be ready to adapt to the other side accordingly, but still have your list of confirms you need. My list of confirms to go against the UCAD buys would needing to be to break the bullish structure, clear through all this price sensitivity to the left, and dollar go bearish with a break and retest below 1.258. Otherwise, my main bias is still the potential buys to come. All right. Now, the stock market, I still see as very bullish, and I think the stock market is going to be the last to be impacted from the tapering, as I was talking about at the start of the webinar when I was giving a lot of the educational breakdown. All you've seen in the stock market is the ultra rich keep having buys extended to new highs, taking profit out of the market, creating these pullback phases as sellers jump in hand to relieve them out of the market. Then you create these dips that come down to better demanded price points, fulfill more buyer order flow, and keep chugging to the upside. That's all we've seen. We saw that happen last week as well from this previous low at 33,800, and we're maintaining some very nice bullish market structure that's developing here as well. On the US stock market index, I'm looking for pullback buys 34,600, buys above 35K, and still looking to target the previous all-time highs. I would only be selling the stock market below 34,300. The next crypto update is going to be this week as well, or next week, but it's still following my long-term short analysis that was given on the crypto crash webinar. Okay, so we went through some historical repetition, higher time frame analysis, fundamentals and technicals. We understand that we're coming towards the end of the quarter and end of the month, as well as have a flood of central bank speakers this week, so markets can get messy. We know that the tapering bias is having short-term impact on dollar strength from last FOMC, as well as gold being bearish and other commodities and assets starting to turn a bit more bearish in the short term. We understand what economic data we have this week, and I gave out the trade ideas that I'm looking for on gold, GJ, GBPUSD, EURUSD, USDCAD, and US30. I suggest, as we're all manual retail traders, this week either be more on the sidelines, or just scalp. Take some quick jabs at the market, because you don't want to have your trades get impacted by the price fluctuations that come from a central bank speaker giving a statement or coming from an economic data report release, because we have central bank speakers from various regions this week, mainly from UK side, Euro side, and US, and it's the end of a quarter. So expect some volatility in order flow setup for the next quarter. And then next month, I expect a lot cleaner moves, especially if we continue to see stronger US economic data, which is going to signal to us that the Feds are getting closer and closer to tapering. And we know now, if you follow this webinar, the impact tapering is going to have on the financial markets. US dollar bullish, other assets and commodities bearish in the short term, with that historical and technical repetition we saw and that we identified earlier, right? So stream reminders, please, you guys see all your resources here. Make sure you guys look at the links in the description as well. If you guys want to learn more, don't forget the Capital Hungry YouTube page has dozens, and like, for example, for anything that was confusing, I know I was joking around and roasting some of you guys for being retards, not understanding the Federal Reserve stuff, but that's just me joking around. It's not stuff that's easy to understand, and it's something that you have to go actively and learn. For anybody who was confused at the start when I was talking about US dollar movement, go watch this webinar. It'll give you a full breakdown of what happened with the pandemic and central bank. I also suggest, for even more understanding of the historical repetition, that you go watch this webinar as well, GJ timeline, where we actually have an economic recovery. We were calling GJ buys from like the 125s and 130 price points, looking at the recovery stage and what we see to come. Price broke, you know what I mean? Calling the buys from 130 lows going up to, and that's why I really points. Just lows. But in that webinar, I did a full historical and technical repetition for some economic recovery after those lows were tested again in this bearish market structure, and you had this wick range get filled through my lens. So remember, the Capital Hungry YouTube page, for anybody who actually, nowadays, nobody really likes to be educated and learn. Most people just want to be entertained. That's why, like, my YouTube videos don't get too many views. More people are more interested in going and looking at memes on TikTok or scrolling through IG or watching videos that entertain them on YouTube rather than educate themselves. Because when you educate yourself, it can bring you a lot of questions. It can make your brain hurt. It can be stressful as you're going through that process, because educating yourself is like working out your muscles, but you're working out your brain instead. When you're going through a workout, you're literally tearing down your muscles and you're putting your body through stress and tension, through difficult pressure to come out with a growth and strength. It's the same thing when you're going through learning something new. That bit of tension or stress you may feel, you should embrace that because you know that your brain is going through a process of growth and learning. Regardless if it takes you a day to learn something or a year, that doesn't fucking matter. So don't be scared to learn something just because you may be slower at learning when you went through school or when you went through college or you were dumber in school or got bad grades. We all have the same brains. You can learn whatever the fuck you put your brain to. You just have to go through the process day in and day out. You know what I mean? So just like you would work out your muscles, it's very easy to see that. Don't forget to work out your brain. Go learn as much as you can. So you have tons of webinars on the YouTube page. Within the Capital Hungry Twitter, you have tons of news headlines as well. You have the Capital Hungry Telegram analysis channel. I gotta unpin this now. You have the Capital Hungry free Telegram analysis channel, right? And all of these resources at your fingertips. If you want to learn more, you can come join the private channel and pay the monthly fee. We have access to the newsroom, up to the minute news, more than the news Twitter, of course, and more than any mainstream news sources. You get access to the virtual trade room where you have price monitor updates, so you don't have to always be checking TradingView on your phone. You have news updates, other members sharing analysis, key level price alerts, like for example when gold hit 1751 and so forth. You have other members sharing their analysis. You have me sharing my trade ideas. You also get access to 5 New York scalping sessions a week that we do live. You get access to 5 market update webinars where we share trade ideas for scalp and day trade ideas. We do pretty much I do like 15 webinars a week in Capital Hungry. There's too much shit for me to explain. You guys can go check the website. Anyways, that's it, everybody. I'm going to call it a day here. Crypto King, you're a fucking retard. Bitcoin 200K. Go, actually, you know what, Crypto King? You're a smart guy. You should fucking take out a mortgage loan. Maybe if you have a house, you should take out the liquidity out of the house, and I think you should put it into Bitcoin then. If you are that confident, put everything you have into Bitcoin. And then let's see if you're right. Man thinks Bitcoin's stronger than the US dollar. Fuck, man. I feel bad for some people. Yeah, bro. I bet you did. Alright, everybody. Thank you for attending. Make sure you guys like, subscribe, turn post notifications on. I'll see you guys on Wednesday morning for the scalping session.